All right, guys, glad to have you on board again today. Right back from vacations. Last week was off, and you were aware of that normally. I'm right back at work now, ready for the new 2023-2024 session and season. Just like I did for the previous years, nothing's going to change. And even though this week could be a new beginning, kind of, it's still to me repeating the same old stuff. So remember, you have years of track record in here, just doing the same old regular stuff. Consistency is what I deliver here, and I intend to do it as well in the season to come. Without further ado, let's jump in. So, a quick look at our sentiment dashboard. Even though I intend to find some time whenever I'll be able to restore this dashboard to its previous beauty, because most of these ingredients have been destroyed over time just because the links went down or changed. So I'll try to put that back up. Until then, we always pay attention to these two things that keep working. So in terms of smart money sentiment, we can see that as expected, we find some support into the neutral kind of area, somewhere around 50, in what could look like an upward trend channel. It's hard to say, of course, because remember, we can't do analysis on sentiment data, but there is an intrinsic long-term correlation between sentiment data and momentum. They tend to very well behave similarly. So in that sense, we can say that if momentum data is suggesting as well a rebalancing, and if the price doesn't oppose these things, we could have a positive bias for the stock market. That's just one metric. Remember, sentiment, and no single indicator will ever give us a signal. So that's really just noting down that information from sentiment, and we'll look at it from other lenses. When it comes to crypto, the difference is still significant, where actually the stock market finds some support. It still looks like finding some support in 50 area. Well, it feels like crypto does the opposite way around. It just finds significant resistance over the neutral sentiment. We're back down into fear, even though we had a rebalance attempt with SEC rulings. But this is really, really the kind of market that just want to maximize pain. So just for how long, we'll see. Of course, charts will always give us the answer. On that front, of course, we're limited to 20 minutes in here. So I plan on releasing a YouTube video this week when I'll find some time to do it as well. In which I won't be limited to those 20 minutes, covering kind of what happened throughout the summer on the longer term time frames, which critical supports have been broken or resistances, according to the larger plans. So we'll see all about that on a separate video. I'll try to remain to the bigger picture in here and looking at our macro framework. So let's update it, by the way. Okay, we can see that the overnight reverse repo keeps each trend down. That still means that the liquidity that is required for the market treasuries and stuff like that, treasuries new collections are coming out from these markets, which still is hard to figure out in the balance. We'll look at the net liquidity chart. SPY, I want to mention, remember, we've got a quality expiration, the fourth, which is on September 15th. That's 11 days away from now. And if you look at the IVSQ, which you can definitely see as well in the so-called max pain indicator, you would see that there is a hell of a lot of pain that could come out of short liquidation. So pay attention. The pain to the S&P 500 is actually to the upside. So very, very critically important to understand that there are hell a lot of out of money shorts, and the time just goes more and more painful for these guys. So we'll see, of course, that's just a second element. Remember that we've seen that sentiment could support. We see that derivative market liquidations could support, but that doesn't mean the price will go up. We'll look at the technicals in the end anyway. Okay, on the inflation data side, still, I mean, it came to the background for some time. It's still present for now. Remember, it is the main driver of Fed policy. And in here, same old story. It seems like we've built a long-term bottom as I was expecting. It just came with a little bit of a delay. I was expecting this to show up in somewhere like April or May. It just ended up being in through the summer. So just a 3 to 4 month delay in here. But we ended up with the same situation. The gap between the government reported data and the unofficial, but more reliable truflation data are now narrowing significantly. It's time that this decorrelation pattern is finally terminated. Okay. On the other hand, we had PC official numbers, and well, the market turmoil caused by the slight uptick in here. But as we can see on the semester and quarterly basis, it wasn't supported as well. Remember, the Fed is looking at the three of them. So one going up is certainly not going to change anything but on the course. On that side, as you can see, market doesn't expect any rate hike in September as well. And there are significant probabilities in here. We're far above 80 or 85, which is generally the turnable point. So there are no chances the market for now expects to expect a new rate hike. And we see that the probabilities are likely going to change further down the line as well into November. When it comes to crypto factors, remember we look at it this long term to try figuring out when the market's finally going to bottom and get out of these same old narrative of Bitcoin only and the rest is full of shit. Don't go into risk and so on. The critical bear market pattern of the previous cycle, aka everything goes back into Bitcoin and only then the others will be afforded to shine. Well, in that time, I've said it multiple times, the cycle is entirely different. The maturity has nothing to be compared to 2018 and 2019. Still, people like to copy paste. So I've said it, it's dangerous because of course market psychology can create some significant repeated patterns, but the thing is that it's nothing but different all the time. So really all that thing is important. The market tend to rhyme, they never copy paste. So on that front, I would tend to say those who say and expect another desert crossing phase, nothing's going to happen. 2023 is going to be a boring year. 2024, at least the beginning of it, is going to be very boring. Don't expect a bull market until late 2024. I entirely disagree with that. I'm just waiting for the market to prove me right. For now, of course, I'm just not being proven right. Not being proven wrong either. It's just that, well, for now, we're trying to go as low as we can. I'm waiting for that oversold rally that's going to come out of it because the altcoins are absolutely destroyed. The good ones, the bad ones, just everyone is out and waiting for volume. So that means, remember, when the bears will have to short cover, or to close their shorts or to get liquidated on the shorts, this is where we'll have the true prices. Right now, just everybody is either out of the market or selling it. It's going to be very dangerous when the sellers will take their profits in absolutely inexistent liquidity positions in the exchanges. So don't get me wrong, volatility will hit both ways. I'm just waiting for that moment to show up. On the other following metrics, GBTC discount has now gone out of the 33 level. You might have seen the SEC rulings as well. So that has caused the unlocking of this critical 30% area. So this is to me a good point, a good sign for a future resolution, which I've always been an advocate for. When it comes to liquidation, as you can see, well, there were some positions and they got liquidated and into the long side. So could have been going down both ways, but as you've seen, we've decided to go for long liquidations instead, which is the translation of this open interest going significantly down, which means, well, basically all of these liquidations are destroying everything that's been accumulating since April, which is the sign that as we go right back to April and we only liquidated longs, it means since that time, it's mostly long positions that have been accumulated. That might also have been the reason why prices didn't move. Basically, the brokers just play the time period. They just play the time premium. They get paid for time. So they've been destroying volatility as you guys were piling up on long position. Of course, as time is costing the leverage traders, sooner and later, over time, their stop level rises. Slowly but steadily, as they do have to pay for interests and rollovers. And day after day, their liquidation threshold just goes higher and higher until, of course, it goes high enough for the brokers to liquidate them all in the same time. So like I said, this down move that we've had is absolute full of shit. It's just futures liquidation. Same story. Nothing had happened for months, and we've liquidated the traders, which over time got their invalidation level risen just by the premiums of risks due to their expectation of leveraged profits in a market that just didn't want to do anything. So that's really what this whole summer has been all about, in my humble opinion. When it comes to these Ethereum summers, we can see activity has gone lower, but still Ethereum remains deflationary, which to me is a very significant landmark. That means, well, in the years most uninteresting times to trade, when everyone's just taking vacation and thinking anything but market, well, we still have deflation in the pipelines. It's really staggering to me. L2 activity, same story. I mean, we're in the most boring times of the year and still activity is in here. Same old winners in this category. Ziki Singh era is still leading with a significant margin. Not significant enough to extract from the others and to extract from gravity, but still, it's very, very important. On my personal opinion, I see hell a lot of noise around Base, which I can still see throughout the numbers. So I would stand to see, I get careful on early hype and communication efforts. Even though I think Base is a legitimate competitor for the future, I definitely want it to be proven through data points, not just hype. When it comes to Ethereum validated queue, as you can see, this one's going down. We're now at 20 days or somewhere. So the crossover is going to come over at some point. We're at 22, 21%, sorry, of the total Ethereum supply staked. And remember that lots of these Ethereums have been lost anyway, and they're not counted down. So I would say we're roughly at 25%. So 1/4 of available Ethereums are staked. And I'll still expect that number to rise a bit over the years. But we have a first critical level to be reached out to in the forthcoming weeks, as of course the validated queue will start to neutralize. So very, very important. And finally, quick look at my personal portfolio throughout the summer. As you can see, not that much activity on my end. The portfolio has pretty much been exactly the same as it was before. So done absolutely nothing on my end, but just getting my rewards and doing some things with it for some, but basically, as you can see, not that many changes. All right, we're already 11 minutes in, so let's go immediately to the charts. Okay, so if we look at the S&P 500, same old context in a weekly basis, we're in that resistant territory. We had signals suggesting the probability of a range. We've had the first positive reaction out of this, which neutralized the momentum back to some more neutral territory. We've had the signals signaling bear, which to me isn't a good sign. That still means we have some resistance in this territory, and I'd rather like to be cautious. Reason why, like I said, I shorted this area to cover my bullish exposition on the US stocks. Stock picked, of course. I'm not just buying the whole thing. I've been going short, profit taking rather quickly. I think I've been profit taking halfway through. The market decided to go a bit lower. I said I would sell again, which is exactly what I've done. I think just this morning, right before recording that video. So same story. I'm just reinvesting the previous gains, which means if I get stopped out, I'm just losing the previous gains, nothing more than that, as I don't think the market has enough strength to go higher. So remember, that's the same old story. I don't think the market's going lower because of the support given by the other two factors. The momentum and the sentiment are still positive. At least they look like they are for now, and I see no reasons for them to invalidate until then. And on the other hand, we've also seen that the IV skews, and therefore the max pain, are to the upside. So I don't think we're going to go crashing like crazy and stuff like that, at least not until September. Okay, so pay attention to this. There is still significant risk to the upside. Reason why I do only reinvest previous gains. I don't invest capital into this trade, which means the size of this position is lower than it was on the first one. That's where the way it goes. And stop is larger as well to absorb potential volatility. I've gone back down as well into the Deutsche Index, the German DAX, sorry. So that's pretty much the same as I did back then, and just covering a bullish portfolio on the other hand. So I'm not just selling because of the end of the world and stuff like that. We're just in a resistant territory, and I'm hedging the portfolio for shorter term risks against the longer term exposition of my portfolio. Pretty much all that is. When it comes to the rest, quick look at WTI, but I will probably save these as I have a limited time today for the YouTube video, which we're going to have a look at more in-depth commodity stuff, because lots of things have happened throughout the summer in this realm. TLDR in here is that, well, WTI has reached my first profit takings weeks ago, and I told you I was triggering some partial taking profits. The second part of that positions are targeting the 100 and so level, this third range boundary, though I'm very much far away from taking the whole profits and just taking partial profits for shorter term positions. And of course, I'll be ready to reinvest if this thing goes lower. I doubt it will, but that's the thing. When it comes to gold and silver, or we call them the precious metal area of the portfolio, there has been some trading activity in support of the 22 levels, which have been tested twice. Actually, kind of weird activity in here. Nice rebounds as well throughout the summertime. We'll see all about that. Next area is to break above the resistant context in here, which is a breakout level of a previous third range boundary. So frankly, I think there will be very limited resistance over the 26 level. But the thing is that we'll still have to get there. So remember that until then, we're halfway between the support and the resistance. To me, the resistance is going to be broken, but that doesn't mean we can't go all in once again into the support. So that's a possibility. Like I said, 22 is the critical support to be maintained for this trend to pursue. And of course, 26 is the target level to be reached out to confirm the upward momentum. Until then, well, I don't have anything else to add to this. There is a significant chance to break that cycle. But of course, until then, we can just spend that time flat. So I'm not crazy bullish when prices are actually uninteresting like that. But I'm, of course, have been buying at the 22 level. That's really what it's all been about. Same thing can be replicated to other metals. Very, very quickly going to cryptocurrencies because this is where you guys are interested most. And I think there are plenty of things to be talking about. Despite the fact that the volatility has increased, if you look at the candle closes, I mean, this is just crazy. We're closing exactly at the open prices of the weeks. To me, that's the same old story. It's just, I mean, so many people opening their mouth, just absolutely full of shit. It's just incredible. Whenever there have been strictly low levels of volatility. We knew that the volatility would be expected afterwards, up, down, whatever. We just knew anyway that on the shorter time frames, the ones that we will that we follow in the YouTube channel on every Wednesday, the flow trading. This is just basically trying to follow money flows in shorter time frames. Well, on this end, to me, there has been a trade triggered in this area, and well, this is still ongoing now. Until then, of course, I don't know what that is. All I can say is that we've liquidated some longs. Now, to me, seems like the shorts is the next to come. That doesn't mean we need to trade it. All I'm saying is that, well, upon the trades that I personally take, this was an entry point. This is where the stop loss is. So to me, I see two things. Either we now liquidate the shorts or we will go for liquidating another bunch of longs, but this requires a significant drop in price because the next liquidation level for Bitcoin is to go there, is to go below 20K. When on the other hand, well, as you can see, this is the same old one-to-one ratio. So we're perfectly in the middle for maximizing uncertainty because as long as we stay in here, there's an equal possibility and equal distance to liquidate either longs or shorts. The message still remains to me that on those flow tradings, you can't know, you can't predict, you just trade and take the risk. God knows what's going to come out of this particular trade. These strategies are profitable over 100 trades. So get me right on this one. I don't nearly give a fuck about what the next move is for Bitcoin. All I can tell is that I'm either going to win or lose, but out of 100 similar trades, I'll always make money. So I don't make it any personal with Bitcoin or some other trades on these flow things. It's really out of any emotional tension or attachment to any trade. It's just, well, I trade what I see. That's what it is. If it's bullish and if we go for a third flow, well, boys, we're going to liquidate quite some bears. The next area for me is probably somewhere around the 38% retracement Fibonacci, somewhere around 36K for Bitcoin. That's just one way to go. It's just technical targets. We'll see, of course. This is just flow trading. There's no way for you to know which angle and which distance this flow will perform. It's really just if it works out that way, we'll get ascending bottoms and ascending tops, and we just go grind all the way higher until my personal assumption is the area for 2023 is just going back to 40K, which is just mid area for this range. This is just like, okay, we might have gone a bit too fast, too high. Now we've gone too fast, too low, and we're kind of gonna settle in between to terminate 2023. That's always been my assumption, back to neutrality, because we've gone extremely lower and extremely lower in every metric. Remember, even though on-chain analysis itself has created the entire bear market cycle, that means I never would have expected this market to oversell as violently as it did. Of course, I wasn't expecting that there were so much cheaters behind that scene, the FTXs and the like, that were basically swimming naked, over leveraged with investors' funds. So that was really a slap in my face, frankly. And like I said, I haven't hidden myself. I was goddamn wrong with all that bear market assumption. I never thought that one coming, and I took it right into the face, but it didn't nearly change the long-term conviction. That's really the way it is. So for the remaining minute there is, I would tend to say one thing. Remember that the number one question investors have in their head now, and I'm going to try answering this one in much greater detail in a YouTube dedicated video, is to whether or not we're going full-blown bear market cycle in which there is a desert crossing phase, pretty much similar to 2019. There's going to be several months of market inactivity. Everybody's going out. Traders getting interested, uninterested. Everybody getting just flushed by the time. I don't think that's what's ahead of us. I have multiple data points suggesting this isn't going to be the case. Out of them, many that we've already been talking about for a while, the activity on chain and stuff like that. Some networks do and will go over this desert crossing phase because just nothing happens there. But on the other hand, a few set of selected networks have had crazy activity throughout this bear market, throughout the summer, which have experienced being always very critically low activity levels. That's the sign to me that things are different this time around. Don't go for the 2019 boring period stuff. like I've always said, make your choices, be patient, but certainly don't be away from this market and waiting for volatility. There are several signs suggesting this is far from being a dead market. See you guys later, and I'll cover this in greater detail in the forthcoming YouTube video. Bye bye, and see you next week.